Hi traders, so with the US government shutdown still going on, the markets remain quiet, especially the FX markets, but the major equity indices continue to print bullish price action. Yesterday, the German DAX index closed a little bit higher, but now it's back down, consolidating its recent sharp gains. Last week, remember, we staged a massive breakout from a continuation pattern to the upside, so this week's hesitation here makes perfect technical sense as momentum indicators unwind from overbought conditions, at least in the short term anyway, which could then pave the way for fresh buying as the week unfolds. So the breakout is quite significant because of the length of time the index had spent in consolidation. Now that we have got the clean breakout, it looks like a new record high could be on the way very soon for the German DAX index, despite its apparent lack of momentum in the last couple of days. So I think what is happening here is the market is kind of coiling now for another potential breakout to the upside, I think. And the fact that it is happening just right where the prior resistance area comes in makes it all the more interesting, because I think it's giving bearish speculators false hope that the market may have formed a double or triple top here before it takes their stops and pushes further higher. So I think that's what's happening here, and I wouldn't be surprised if we see a new high, possibly as early as today, but more likely later in the week, especially if the US government shutdown ends. But the breakout has left behind lots of support levels, so even if the index does go down a little bit from here, there will be lots of support levels to watch, which could potentially provide a floor for the market. So let's explore those levels now. So as I zoom in, you can see the area between 23,950 to 24,000 was a prior support and resistance level. I think that's the main area of support now to watch, given the fact that we've broken cleanly above it. So that area remains exposed for a potential retest from above, but the index doesn't necessarily need to come back down to this area because of the lengthy consolidation previously, meaning that this area has already been tested in the past on several occasions. So the more likely scenario, in my view, is that the index may instead form potential support around current levels, where previously it had formed support. If you zoom in on the lower time frames, you'll see that area. This is the hourly here. You can see that right here at around 24,300 or so is where the DAX had found good support yesterday, given that this was a previous breakout zone on the hourly time frame. So in the very short term outlook, this zone is very important to watch. But going back to the daily time frame and looking at some of the other levels, I mentioned the importance of the 24,000 level. Below that is the base of the breakout at 23,750, which is now kind of the line in the sand for me. I don't want the index to go back below that area, because then that would invalidate this bullish breakout that we've seen. The long-term support, which was this purple area at around 23,400 or so, this level was very important to hold it dead after several attempts from bearish speculators to push the market below this area failed. So that's very important to keep an eye on insofar as the longer term outlook is concerned. But in the very short term, the levels I mentioned earlier, in particular the 24,300 now, is where I'm expecting the market to potentially bounce from. So where do we go from here? That's a key question. Well, I think there's going to be lots of liquidity now resting above the all-time high. We've seen a number of major global indices break record highs, and I think the German DAX is going to follow suit. This is because of a positive macro backdrop for equity markets, especially in Germany, where the government is expected to unleash lots of fiscal stimulus in the years ahead, and that could help support the German economy and in turn boost company earnings. So because of a positive macro backdrop and a strong bullish technical trend, there's little point in trying to fight this trend unless the market makes a clear reversal sign. For the time being, the path of least resistance is clearly to the upside, so we prefer buying the dips into support rather than selling into rallies at resistance. With that in mind, I think a clean breakout above the 24,500 to 24,650 area, the shaded gray area, is on the cards. And if and when we get above that area and hold above it, then the path towards the 25,000 psychologically important level will be cleared, in my view. And that's where I think the market is headed to next. Above that, we'll be trading in uncharted territory, so there are no obvious further resistance levels to watch apart from the obvious round handles. But I've also got this area marked as a possible target. And how I've come up with this area is I've measured the height of this continuation pattern or the consolidation pattern from this purple area to this gray area, and I've added that point range above the height of this area of consolidation to give me a measured target area at around the 26,000 psychologically important level, or specifically between 25,800 to 26,280, depending on how you measure the height of the prior consolidation. So that area is a long-term target for me for the German DAX index. Will we get there remains to be seen, but I've left it there just for the time being, and we will revisit that area if and when we get closer to it at a later point in time. For the time being, though, all the focus should be on can we break out to new highs, and judging by recent price action, I think the odds for a potential breakout looks increasingly likely. We have seen the gold futures hit the psychologically important 4,000 mark. It tagged that level overnight and pulled back from it. Gold prices remain significantly overbought on any time frame, including the daily and weekly. If I put the RSI here, you can see that it's above 75 on the daily. On the weekly, it's above 80, and on the monthly time frame, it is above 90. These kind of RSI levels are very rare. They do point to strong momentum, but it's also a warning sign that the markets are perhaps a little bit overheated and a bit of a pullback at the very least, or consolidation could be on the way. Now, keep an eye on the actual gold prices. They haven't really hit the 4,000, the spot gold, I should say. They haven't hit the $4,000 level yet, but the path of least resistance is clearly to the upside, with the market making higher highs and higher lows with very shallow dips, suggesting that the momentum is really strong at the moment. And I wouldn't be surprised for gold to climb above the 4,000 level in the days ahead, unless something fundamentally changes to cause a major reversal in gold prices. But I do expect some profit taking around that 4,000 level. Whether or not it will then top out there or push on remains to be seen. But we'll cross that bridge if and when we get there. Key support for gold comes in at 3,890-ish zone, this blue line here. Below that, we have this bullish trend line and then the 21-day exponential moving average. But the key support level to watch is that 3,895 level. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.